A wonderful evening, everyone, and thank you for joining us for our installment of AMA Ask Me Anything. And coincidentally, the name of our CEO is Mark, so ask Mark anything. My name is Amen Ghebre, Head of Wealth Advisor here at Sarwa. I want to thank everyone for joining us this evening, taking the time out of their day to be able to ask us questions, things that you might be very curious about, whether it be about how Sarwa operates, whether it be questions for our co-founder and our CEO about the journey of becoming an entrepreneur, or whether it be just about Sarwa's services that we offer, we're here to help. I want to give the opportunity to Mark to introduce himself. And I mean, obviously, we know you here, Mark. There's no question about it. But I would imagine all the users who just recently registered may not know the person behind Sarwa, and it'll be great for them to get to know a little bit more about you. So, Mark, if I may ask, can you tell everybody a little bit more about yourself?
Thank you, Amen, and thanks everyone again for joining us for this session. We love doing these events to openly talk about Sarwa and anything you have on your mind and do our best to answer that. My name is Mark. I'm the co-founder and CEO of Sarwa. We started the company more than 6 years ago already. And before that, my background is in finance and consulting. And I started Sarwa with my co-founders after and in the UAE specifically, where we felt like people were not well served. They were trying to figure out solutions that were complicated, intimidating for trading, or didn't have local bank accounts or local ways to cater to them. And today Sarwa has multiple products regulated by two regulators, one in Abu Dhabi, that's the main one for us, and another one in Dubai. So we have Sarwa Trade, Sarwa Invest, Sarwa Crypto, and Sarwa Save that are under the ADGM umbrella, and Sarwa Invest that also is under the Dubai umbrella for now. And each one has its own flavors. It's really, we built Sarwa so that you can pick and choose if you want more support, less support to do your trading. So the more the platform evolved, we made it so that it's much more personalized. And as you noticed, you asked me a question about me, and I transitioned into Sarwa as they're interlinked, and I have this bad habit to break. But yeah.
That was completely natural. I think you spend about 100 hours a week here anyhow, so it's quite normal. You're one and the same. I want to ask you about the journey leading up to where we are today, Mark. Because now when you look at Sarwa in the landscape, we operate on an international scale where we've got clients all across the globe, and they can operate and open accounts with us. We've got multi-products, as you mentioned itself, where we are essentially a one-stop shop. So whether it be you have needs such as trading, crypto, or whether you're just looking for a deposit account, or whether you want some hand-holding and you want somebody to kind of give you guided advice and manage your portfolio for you, we've undeniably made a mark in the region itself. But that's not without a lot of work that went into it. So I was wondering maybe if you can just give the audience a little bit of background about how we got here today.
Oof, that's a big question. I would say it's one step at a time. The first part is identifying a real gap where people didn't have, they were left unserved. The minimums for private banks were too crazy. The fees were too high. And they keep increasing the minimums to be served from qualifying for $1 million to $3 million, and you feel like they're almost doing you a favor. When we were coming in and saying we have the same tools, we have more advanced funds that are cheaper, that perform better, and we charge a fraction of what the industry is charging. So I think the first entry into the space was identifying a problem of access, and one where most people were sitting in cash not because they weren't eligible, as much as they were left on the side by the industry. So that was, I would say, a big cornerstone. And the type of people we hired are very like-minded people from the industry that felt that people like you, Ayman, that left the industry wanted to have more of an impact with not just the ultra high net worth individuals, but people that are on the path to financial freedom as well, or not necessarily only those that have achieved it. I think the second step in the journey was COVID, where I definitely think it did a lot of people rewired their way of looking at finance and their investments. during that period, there was a lot of self-reflection, and the market started to the market got a lot of attention first from a very heavy drawback where the S&P fell by like roughly 30%, and then it went up. So I think that volatility raised some eyebrows around, okay, what is really happening? What's causing this volatility? What do you do in these situations? And we were all at home and reading up a lot on investing, that it became for a lot of people a hobby or a passion even in some cases, so that they can earn a second income or a passive income on top of it. So, and I think that was a key thing for the firm, where we realized we also need to give more control to our customers so that they can also trade across multiple asset classes. So
Okay.
I was gonna say just some house rules, like if people are aware to how to ask questions. So we're starting to have some questions also come in
Amazing.
that we can dive into. But
Thank
yeah,
you.
these are, I would say, some of the pillars. And I think today, before going into Q&A, what's really important to us is, I would say, four things that set Sarwa apart, where the first one is the simplicity of the platform. So the second one, I would say, is the trust. So continuing to build trust through great support, great conversation, content, and give people a different feel of what the financial services historically has been, that's much more um, distanced from the consumer. And I
Mhm.
would say the third pillar is choice. So giving people more choice and bringing the tools of the wealthy, the asset classes that the wealthy have, to everyone and earlier in your career or in your journey of investing rather. And finally, I would say value. So making sure we give a lot of value, similar to free educational sessions, and feeling like you're getting your money's worth in terms of the fees you pay.
Thank you for that. Amazing, Mark. You're absolutely right. And I just wanted to let everybody know this is an opportunity to ask questions that you have for Mark. So do feel free to be able to type them right into the Q&A section. We will be taking them one by one. And maybe we can just start with the first question. The first question that we received actually right away.
Mhm.
It's by Zainab. Thank you very much, Zainab. The question was, hello, Mark. I love Sarwa as a brand and the marketing around it. Kudos to you and building something so great. I was recently exploring a gift for my spouse for our wedding anniversary, and thought what better gift than an investment that would only keep growing over time, hopefully. I
Mhm.
wish Sarwa had a gifting shares feature. Any thoughts or future plans on that? This could help customers celebrate life's moments with the power of meaningful gifting. Wow, beautiful, beautiful. I want to be your friend, Zainab. That's a very thoughtful.
That's not a friend, it's a spouse, I mean.
Oh, sorry. Okay.
But I get why you went there. So thank you, Zainab. I was gonna jump to where Amen was suggesting, which is we do have a referral program, but that's more oriented towards friends and encouraging people to go into the realm of investing together as friends or family. I love your idea, actually. It's something that we've been wanting to do and align it with either a Ramadan or a Christmas or some sort of holiday. So a wedding anniversary is even better as a milestone. So I think ultimately what I can say, even even while that is feature might not be readily available, this is why we have a team of advisors, I would say, for Sarwa, because of these, where especially when it comes to a spouse, we have the feature to have a joint account as well for people that are ready to take that leap. And all of these discussions, as much as we put out some blogs and content, it could warrant a discussion with an advisor in our advisory team to see and openly talk about it. I feel like it could be, maybe you can even celebrate it with like one-on-one, but also after that move into a financial discussion. And we've seen a lot of couples, either married or not, just get value from going into these sessions together. And it's a good moment that it's personal, and you can get into your unique financial situation together, your goals, with an advisor. So sometimes people think that at Sarwa we don't, it's just a tech platform.
Mhm.
But we actually, most of the time, tell the media, for example, to avoid using the word robo advisor, because we feel like there's a huge part to play from the advisory arm that we have that goes into some of these moments and these milestones to celebrate and to equip you for your financial future.
Thank you for that, Mark. And then just to add to that as well, too, just an additional idea, and I see this a lot with our clients who are parents, and they're looking to save for their children's future. So it might have a similar, approach to it, slightly different. But what they'll do is they'll open a multiple accounts, one for each goal. So, for example, you might have a couple that might work towards a common goal, which is maybe their retirement nest egg, but they might open sub accounts for their children's, financial, needs, many years into the future, or maybe just helping them get a head start on life at a later stage in life. So there's many options that you do have available from that perspective within your portfolio. So feel free, reach out to us. Happy to walk you through the different options that you have. Sometimes just having a conversation might illuminate some ideas on how to help you achieve that goal. I'll move on to the second question. It's by Anonymous. It states here, the question is, my account is saying that my funds need to be rebalanced. Can you explain what that actually does?
Yeah, of course. Thanks for raising that. So rebalancing is, think of it as a calibration to your portfolio, where with time, unlike a savings account that is stable and gives you interest at a usually a monthly cadence, investments will vary quite a bit, and some assets will move more than others. So, and the reason we don't like that too much is because, let's say when you start out, you are in a balanced portfolio. For simplicity, I'm going to call balance 70% stocks, 30% bonds. Let's say bonds went up like they did stocks went up like they did last year. Maybe that mix is now at 80-20 instead of 70-30. And what that means is that you've now taken on more risk than what you initially signed up for. And so what we would do when you're at 80-20 and you need to be rebalanced, we would sell stocks in this case to bring you back to that 70%. And what's really cool about that is that you remove the guesswork out of changing your allocation. And this is where a lot of people get it wrong, where instead of selling when stocks increased, in this case, so you're selling higher, which is great. So that's what I mean by removing the guesswork, is you automate so that you're always selling high, buying low. So that's what rebalancing means. Think of it as a maintenance and making sure your portfolio is up to date or not too out of touch with what you initially signed up for. And this is a flexible thing. So with time, we've seen people decrease or increase their risk. So as they become more sophisticated, as they become more comfortable with risk, some people go from a balance to a growth portfolio. And then we can set a new optimal portfolio. So this is what rebalancing does. It's our favorite part of the service, I would say, of Invest, because it's not difficult to get started with investing. You can even take, we always joke where you could take some of the portfolios of Sarwa and the allocation, steal it and copy it. But the value add of Sarwa Invest and the managed service is that it's not just a once and done thing. You don't need to worry about keeping it up to date on an ongoing basis. So as you are adding money every month, ideally, or whenever you get your income or get paid, you just need to send money without having to worry about how much should I buy of which asset class. So this is what rebalancing does. And it allows you to, it's really built for people that are very busy and understand the importance of investing, but don't feel like going through the weeds and the transactions to do it.
Brilliant. And just to add to that, Anonymous, rebalancing also takes into consideration the dividends or dividend income that you receive as well, right? So it is all encompassing. It's very holistic. It ensures that your money is working as hard as possible. So it's not sitting idle, waiting for your attention. It factors that in as well, too. So your money is making money and you're benefiting from compounding as well. The next question is also by Anonymous, very popular name. And now it's a three-parter. I'll try to get through as many of the questions as possible, but I want to give opportunity for others as well. So, it says, hello, Mark. I'd like to, thank you for the platform, has lots of potential. I'm not in the financial sector, so don't mind my questions. But my question first one is, Since Sarwa isn't open to American citizens, I'm assuming all of the clientele aren't Americans. Fair assumption. Then why are all the ETFs available in Sarwa listed in the US versus other options like UCITS, whether it be Sarwa Trade or Sarwa Invest, especially considering the 30% withholding tax and possible estate tax? Brilliant question, by the way.
Mhm. Great. I'm really glad you asked that because when we started the company, this was almost like a belief that if you didn't sign up to, you would almost get it was such a commonly held belief that you have to be in UCITS and not invested in the US. And almost even until today, there's quite a lot of forums that will tell you that and that will prefer to go to, let's say, the London Stock Exchange versus the New York Stock Exchange. And I think that's kind of the benefit that Sarwa provided is we were looking at it from fresh eyes as opposed to just signing up to the beliefs that were shared by everyone. And before signing up to that belief where hypothetically you're better off by avoiding some withholding taxes, when we looked at the actual performance, we started comparing similar asset classes. So we would look at, let's say, the S&P 500, if you bought it on the New York Stock Exchange in the US versus what happens if you bought it on the equivalent on the London Stock Exchange. And we started to see that the US stock market the ETFs there were cheaper, so lower expense ratios, and they just had a better performance over a long period of time, or more often than not, they were more favorable. And given we don't make any money from recommending one or the other, we're independent in the selection of one market versus another, this ETF or that ETF. We signed up with what would maximize value for our clients and went with the US stock market because despite having withholding taxes that are higher, dividends are just a small part of your total investing, and the majority of your gain is from the appreciation of the value.
Mhm.
So, so I think really glad you asked that because on paper, these kind of things, especially when it comes to taxes, it rubs people the wrong way and they want to avoid it at all costs. But it's important to do that's part of the value we provided. When we looked into it a bit more, we realized that the US stock market, the liquidity, the lower expense ratio still has so much to offer that we'd still preferred it. There's nothing wrong with UCITS. I'm sure there's it's don't get me wrong, the difference isn't too great neither. I don't want to make it seem like you're doing the wrong thing by investing on the UK or the London Stock Exchange. But since we're doing the exercise, we will chase every basis point here and there to optimize, and that's what we did. And I would say on the estate taxes bit, this applies to individuals, but when we got legal advice around does this apply for companies or for once it's a managed account, estate taxes didn't apply there. So that also gave us comfort to further go into the US stock market on Sarwa Invest. So I hope that that answers your question. And if you write, I believe on Google, Sarwa US versus UK ETFs or something like that, you'll be able to find a blog post that summarizes some of that analysis that we did.
Got it. Got it. So essentially, you'll get better performance or you'll get better market appreciation on the US domicile ETFs. And the concern about estate taxes is already covered because corporations are not subject to estate tax and clients as a result are exempt from it. So those two main primary benefits of UCITS are essentially addressed through Sarwa. It was a question. More than anything else, it was a question. But I guess it's an affirmative. There was a second part to that, Mark, by the way, where the second question by Anonymous, where you're saying, well, why GBTC for Sarwa Invest, right? Versus there's newer spot ETFs that are out, which have a lower expense ratio.
It's a very good question. So GBTC was probably the only or one of the main institutional options before the 11 Bitcoin ETFs got approved. So look out in your inbox, I would say, in the next week or two for an update there. We didn't want to be too hasty in refreshing that decision. and seeing and observing and analyzing in detail some of the more recent ETFs. So we've been having discussions with some of the new players. I actually did a webinar that was for professional clients last week with BlackRock on their new ETF labeled IBIT. So this is something we're actually working on at the moment, and you can expect an update to either keep or change our ETF very soon. But I agree with you that the expense ratio difference is notable and is very attractive that we wanna potentially move away from.
Thank you for that, Mark. I've got a question by Bashir, who said, can you provide information on the measures and guarantees that Sarwa has in place to ensure its continuity? Oh, sorry, the question moved. Bear with me. Oh, just moved. There it is. To ensure its continuity and stability, preventing it from vanishing suddenly or facing abrupt operational challenges.
Yeah, of course. I think it's important to understand, as much as we try to simplify the experience, it's important to understand the multiple players or institutions that you work with across the different products. So with Sarwa, we act as a platform and sometimes as an advisor, but we are not in the business of actually holding your custody. These are some things that we still believe are best done through banks. So you'll have the likes of BMO, Bank of Montreal, or Citibank as well, and some others that act as custodians of your either cash or funds. And on top of that, you also have the guarantee that you're dealing with a regulated platform that holds us accountable to a set of audits, a set of reporting, whether it's internal audits, external audits that constantly review our processes and the state of the firm. And you also have the financial backing of Sarwa from the likes of some of the sovereign wealth funds in the UAE that have invested capital and are backing the company. So the short version of that is that we're regulated. We work with top tier banks and custodians for your money. And there's also a segregation that's mandated by the regulator so that your funds and your cash are held separate from the company, so that you're at any point in time you can withdraw, you can transfer your assets, and you're in full control over the ownership and the movement of your funds.
Thanks for that, Mark. There's a brilliant question here, and this one's going to test you a little bit, Mark. Anonymous says, I really like your marketing. What has been your most successful marketing campaign?
Oof, most successful.
I knew that was going to get you, eh?
There's so many. There's so many. I think the first one that I don't know if it's the most successful, but I feel like it kind of set the tone for a lot of things to come in terms of the brand and the messaging we're gonna go with. But we did one called the sales call a while back where we imitated, especially today, I feel like my phone, I receive so many calls in the UAE from people trying to sell us stuff, and we imitated someone getting a call from um, a British financial advisor trying to sell a savings plan, which were known to be very predatory, very high in fees that lock you in and things like that. And we contrasted that with the Sarwa Genie and the Sarwa experience that's more transparent, friendly. And I feel like the fact that we took a stab at the industry and poked at it, it resonated with a lot of people that where we're calling out like a product that isn't really suitable for long-term investing or got a lot of people rubbed the wrong way. So I think that was a good marketing campaign because it was bold, it was daring, and it resonated with what the state of the industry was a few years back when we were getting started. But there's a lot of them. There's so many. We as much as possible try to have like witty content so that we make it more exciting to talk about investing finance. But to be fair, it's becoming easier. I think there's more of an interest in investing. Before, I feel like it was much harder. And that's why I mentioned COVID, as I don't know what happened but there's been an increased interest in investing when before you were it's not like the kind of thing you would want to talk about at a dinner or at a party necessarily, but now it comes up more than it should.
Yeah, I hear you. Absolutely. Funny enough, that commercial was my first introduction to Sarwa. When I was, going through the interview rounds to join Sarwa, by the way, because that was the first thing, and it was a shock because came from formal banking, and which wasn't exactly fun. And there's no humility in that. And then to come see, wait, this is an investment company, and this is their marketing. I want to work here. So Um, there's a question here by Anonymous. It says here, would it be possible to elaborate on the difference between the normal Sarwa save and the Sarwa save halal?
Yeah, sure thing. Might ask you to help me with that one. But
Yeah,
the
yeah.
normal Sarwa save is basically to give you some background around Sarwa save. We felt like the interest rate, we saw that the interest rates were going up last year. And the main retail banks that we, without naming them necessarily, didn't really move up their pricing, or those that were offering higher rates. There was an asterisk, they had a term, there was things that you had to sign up for. But your classic savings account didn't really move that much. So what we did is we spoke with our partner bank, Saxo Bank, that we use on Sarwa Invest, to see is there a way that where we can pass along and where people can put their cash on their balance sheet and to get an interest where your money is with a European bank and you get interest on that. And it was a win-win for everyone. So Sarwa Save is basically, if you want to know the background behind it, it's basically your money that's going to be on Saxo Bank's balance sheet that pays you 3% per year, but it's divided by 12, so it's on a monthly basis so that you get monthly liquidity. Halal is different because obviously, if you're familiar with the halal method or principles, you shouldn't have interest or so the purpose of Sarwa Safe Halal is to still as much as possible stay true to the principle of very safe,
My apologies, Mark.
very
Sorry. The
liquid,
internet is cutting off
see,
here
or
and
to
Mark.
have short-term savings. Sarwa Safe, did it cut out a bit?
Yeah, I did. Maybe we can maybe start
All right, let
from
me,
the Sarwa save halal, just because it got cut out at that point in time.
yeah, let me know if that happens again and I'll move I'll move. But
Not to worry.
basically, I was saying that Sarwa Safe Halal, the short version is that it's a money market fund. It's not a saving. It's not necessarily being paid an interest. So you'll notice that instead of saying interest and instead of it being an interest, it's a management fee for a very, very low cost and a low risk fund that is with, correct me if I'm wrong, the latest one, Amen, is with Emirates Islamic,
Correct.
right? So this is a fund that they've done with Sharia compliant principles through Emirates Islamic. So that's the difference. But ultimately, one is they're both in the realm of very low risk, so that this is not where you are necessarily going after growth capital as much as short-term liquidity.
Absolutely spot on. Thank you for that. Um, Here, why are the chosen ETFs among, so essentially they're asking why have we chosen distributing dividend ETFs versus accumulated ones?
Distributed dividend.
I mean, I can pick that up if anything else.
Yeah, I'm not. It's yeah. Go for it, Eamon. I think you'll do a
No,
better job at that.
essentially, I think there's a there's a misunderstanding or sometimes assumption here that one is better than the other. But keep in mind that number one, the regardless of whether it's distributing or accumulating, you're still subject to the dividend withholding tax one way or another. So whether it gets paid out or whether it gets reinvested back into the fund itself, the dividend withholding tax still applies. So you don't benefit from a tax treatment in that perspective. Now, when you want to talk about, well, ideally you should have the funds or the dividends reinvested back into the fund itself. Well, we do that effectively through Sarwa Invest anyhow. We actually reinvest your dividends for you, so it's a part of the service, but we are more strategic about it. So just because you receive a dividend from one particular ETF, we look at your portfolio allocation to see, where is there a low-hanging fruit? Where is it under allocated? And we allocate the cash according to where it's needed in your portfolio, because that's, the ideal way to rebalance a portfolio. So that's essentially what we do at Sarwa Invest. So that pain point is essentially addressed by the rebalancing activities of the dividends themselves.
Mm-hmm. I think essentially a lot of the principle in portfolio construction that the team will follow is when you have control and the opportunity to decide on something, we'll take it. So for example, you have some ETFs that can cover all world or developed markets, but we'll like to break it down a bit further so that we have a bit more flexibility over the allocation.
Absolutely. I've got two questions here by Sam, but I'm going to pick one of the questions here. Sam states it. Oh, I lost it. Oh, there we go. Just there's so many questions coming in. It says, thank you for the amazing platform. I've got a question. Would you consider making an AI feature inside Sarwa Trade for stocks? So when stocks go down, the AI can stop the investing process, and thus we can every day make money without losing too much. So essentially, would you consider putting an AI bot on Sarwa Trade?
Not yet. The short answer is not yet. The concept of robo slash algorithmic type of trading is something that's been there for a while, much longer than the recent AI hype. But every time we've looked at it or seen software, we've seen it being more marketing than actual sustained overperformance. And the whole point of Sarwa Trade is to actually give control to the user to make the decisions themselves. Where in our Sarwa Invest, where we are more in charge of the management, we take a passive approach. So having an AI-like feature on trade is almost a hybrid between both, which we're not against. But every time we've looked at these studies or people that claim to have an AI bot that can generate overperformance, it doesn't truly stand the test of time just yet. So, and I don't think that's more my personal view, open to change, but I don't think it will, just because of how efficient markets are and how difficult it is to beat the market over a long period of time. So the way we view trade is more for people to scratch their itch in terms of decision making themselves rather than give control. And on the Sarwa Invest side, if anything, this is where AI could be incorporated to automate, to streamline. But I don't think we're comfortable as yet to give so much power to the bot just yet.
Thanks for that, Mark. There's a question here from Myrat, who said, can you introduce different tiers with Sarwa Trade, like other platforms, like silver, gold, and the higher your investment amount, the less fees you pay, and you get additional options with higher tiers. I guess it's a suggestion more than it is a question, or it could be phrased as a question is, hey, would you consider, different tiers on Sarwa Trade?
Yes, absolutely. A big part of our thinking on Sarwa Trade at the moment is to turn it more and more, to take it to the next level, to make it the best platform for people using it, whether it's for speed of how fast you're making transactions, or whether it's the funding speed and rewarding people that use it the most. So you can expect that at some point in the near future as we work out the most advantageous features and what's going to be premium, what's going to be free. So stay tuned.
Thank you. Fahad has got a question. Says, first of all, massive props to the simplicity of the Sarwa app. As a product professional myself, I do the same with my own app. Now, for the question, does Sarwa have any plans for alternative investments? For example, fractional shares in rare artworks. I know it's not an easy thing to do, but I think it would seriously boost Sarwa's differentiation from the competition.
Yeah, it's a very good question. I was gonna share my screen, but I have it. I can read it as well. So the short answer is yes. There's a study that we referenced last year that was done by Goldman Sachs, where they looked at 2023. What is the portfolio of how are the people that have $1 billion plus investing, and what is their asset allocation? And we saw that the biggest allocation was in public market equities, which is already a good win because that's definitely that's where Sarwa is and focused on today. But there was a big chunk as well that's in alternatives, whether it's hedge funds, whether it's um, uh, private equity or alternatives in general. So as you said, it is more complex because it's less automated. The regulations are trickier to navigate. They're not as necessarily ready. Even Sarwa, when we started, we had to change a lot of policy. We were the first fintech, as a fun fact, to be licensed in the UAE under the innovation license. So this type of work is on the horizon. And the reason I was quoting the Goldman Sachs study is because this is a bit of our North Star, where ultimately, whether you have $1 billion or $10,000, and you can have access, like we do see a world where eventually you'll have access to the same opportunity, of course, pending the right risk profile and for you to be informed. But we do see that happening in the future, and the next version of platforms like us that will want to have it all as a one-stop shop, where there's no, access is no longer, you can fractionalize pretty much everything. So 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 the answer is yes, but it's more complex, so it needs a bit more time to roll out.
Amazing. Thanks for that. There's a question by Anonymous. By the way, do you need a water break or anything, Mark? Are you okay?
No, no, I'm loving it. All good.
It says here, hello, Mark. I'm very new to the world of investing, and here goes my question. I want to invest in halal ETFs. Can you
Mhm.
discuss the differences between halal and regular ETFs?
Yes, of course. It's think of halal as they're mainly focused on excluding, so taking the conventional ones, but excluding certain companies that go against some of the Sharia compliant principles. So BlackRock, for example, is one of the leader in this space, and they have ETFs where they have a committee that will take their conventional. So let's take the U.S. equities exposure, for example, and which would be typically called IVV with BlackRock. And they'll take that and they will run it through a lot of screening and remove, for example, tobacco companies, gambling companies. They'll remove interest like or companies that have a lot of interest, or financial institutions for that matter. And you'll end up with something, I think the ticker is called ISDU or something like that, where it'll be a subset of the US stocks, but it'll exclude a lot of these companies that are problematic, which is really cool because that allows you to have a world, one of the largest, if not the largest asset managers that did this filtering for you. And what's really cool is that this it maps really well, or it correlates very highly with the US stock. So it's not like you're getting a very different flavor. You're getting just enough of a difference where you don't need to worry about your investing conflicting with your other beliefs or your diet or things like that. So you have a full mapping of your values with your investing. And as a fun fact, sometimes halal investing does better, especially when banks who are sometimes fragile and under pressure. So in 2008, you'll see that the halal ETFs did quite well because banks were under a lot of pressure and their performance wasn't as great. So it's also, although you'll see a higher expense ratio from halal ETFs, um, they do have that edge as well, where they could be in some sense less exposed to industries that are uh, that take a hit.
Thank you for that, Mark. There's two questions, and they're very similar. So I'm going to lump them into together. The one question is by Roger, and the other one was by Anonymous. Essentially, for Sarwa Invest, they want to know why is it that we cannot substitute certain assets, whether it be on a company level, for example, like Tesla, or whether it be on an ETF level to substitute. So essentially, they want to know why is that option not available?
To substitute what? Sorry, just to make sure I understand.
So let's just say you wanted to substitute IEFA with another ETF, or maybe even within VTI, I don't want exposure to Tesla, which is a part of VTI.
Oh, yeah.
So I guess a combination of those questions.
Yeah.
Why can you not substitute on a company level or on an ETF level?
I guess in some sense we're a bit OCD on the selection of our ETFs and the performance and predictability of what happens under Sarwa Invest, that it's so that we wanted to keep that untouched, and any additional personalization, it's fully in the control of the user on Sarwa Trade. So there's almost a very different approach there. Some platforms I think will lead to will allow you to maybe personalize things like that. But we're not a big fan because it muddies the water, where we really want to be held accountable to the performance and the choice of the ETFs. And if people start to change them around and exclude and include, it makes it more harder to really understand um, the risk profile, and I think it's a matter of simplicity, where whenever we can, we'll go after simplicity and segregate a managed account versus a hands-on account that you're doing. But I do see the point, and I'm going to repeat myself here, where this is the point of also an advisory relationship, where sometimes when we see someone overexposed to a certain sector, we will work around that and we'll factor that into the financial plan.
Thanks for that. There's a question here. I think there's a lot of questions about rebalancing, and maybe there was a misunderstanding. So I can answer real quickly. Rebalancing is not just the dividends alone. It's actually looking at your portfolio allocations, seeing if there's anything that's underweight or anything that's overweight, and rebalancing them back in line to what your recommended allocation is for your goal. And that could be inclusive also of dividends that are being paid into your account. So I'll just answer that question right away. There's a question here by Mo. It says here, again, thank you for this platform. Are you considering expanding into other markets? And as a two-parter, how do you take into consideration the personal tax of the individual or personal tax situation of the individual? For example, if they're a UK resident, but they've opened an account with us. So
Yeah.
two-parter.
Yeah, I would say in terms of market expansion, we're very focused on the UAE or GCC in general, but beyond that, uh, not so much. We do have people that move and continue using the account outside of these areas, and it is a global account. Unlike we often have to tell people that it's not tied to your visa, unlike like some banks that will force you to close your account if you move, etc. So it is a global account, but we do like to focus as much as possible on the infrastructure of the UAE and wider GCC. So that's around the market side. Around a tax, we're not, I hate to sound generic, but we're not tax advisors, or at least we don't have that in-house capability yet. But I know, Amen, correct me if I'm wrong, but we do have like contacts sometimes that we'll refer to where just people that we know have helped other clients. If that's something you want us to refer you, you can get in touch, and I do believe we have a few contacts depending on your situation.
Absolutely. So again, feel free to reach out to us, have a conversation with us. We don't bite, I promise. So, sometimes one of the benefits of, of working with, a number of professionals in this region is that they also can help us with other clients as well. So sometimes if you're looking for a doctor, we might have a great doctor. If you're looking for an accountant, if you're looking for a lawyer, sometimes you might just ask, and we maybe know someone within our network to be able to introduce you and help you.
If you're
There's
looking
a
for good
question.
ramen,
The ramen, good ramen recommendation. How many times a year do you rebalance the portfolios?
it depends, because the rebalancing isn't just a one-off. For We have something called smart rebalancing. So if you're adding funds, whenever you add funds as well, that could also act as a way to rebalance, because we're not just gonna let's say you add $1,000, we're not going to just apply it and multiply that by your optimal portfolio in a static way. We're going to, when we buy with that $1,000, we're going to prioritize underweight assets. So for someone depositing monthly, you could say as often as 12 months, because that acts as a way to keep the portfolio up to date. But otherwise, it really is going to depend on the volatility that year. If you have big swings throughout the year, you'll rebalance more often. If it's a boring, non-eventful year, maybe you won't need to rebalance. Maybe you'll rebalance once. So we looked at the research there and the best practice, and rebalancing more often wasn't necessarily a better indicator of performance. What really matters is how far off are you from your optimal portfolio. If you're within line and not too far from the thresholds we've set at roughly 10% as a variance, then we don't need to do that. But it's at least something that you don't need to worry about uh, while you live your life. Am I rebalanced? Am I taking on more risk than I should or less risk than I should? That's something that goes away.
There's a question here by Mohammed Saki, who said, what's better, invest or trade? In both cases, I think what they're trying to say here, there's risk associated with both cases, but what's best to make you money, essentially? Sarwa trade or Sarwa invest?
I will personally, well, actually, one important disclosure is none of this is one-on-one advice. To get into your exact situation, and this is not a recommendation, but generally, I always lean towards invest than trade. Personally, I have more of my money in an invest like or in ETFs, but it's very personal. Like the trading is more difficult to beat the market. Although we've seen last year a lot of when we looked at the actual performance of people on Sarwa Trade, it was really good. It's just more difficult to sustain that performance over time. So that's why it depends on your profile. But generally, for someone starting out, the last thing we would want is for someone to place a few trades in very high risky stocks, lose money and be turned off from investing and feel like it's not for them or they're not cut out for it. So that's why invest, the beauty about it is that it's very diversified across geographies, across industries, um, and it allows you to get into investing sometimes or even stay in it. So it's a much more of a disciplined, systematic, boring, less volatile way of investing. So for sure, we will lean towards that than a trade that's much more intense. It's much higher reward. So they're very different. Although the look and feel can match, they're quite different.
Amazing. Thank you for that. Question here by Anonymous. Are you going to add a feature like they do at eToro where people can see other people's trades and follow these portfolios and have automatic trade copying?
No, we don't have that in the roadmap. The reason for that is because unlike eToro, we do have a service where if you are looking for top tier passive returns that beat the majority um, of wealth managers, this is exactly what Sarwa Invest was designed to do. So if someone wants a hands-off way to manage their wealth, this is what our Sarwa Invest platform is meant to do. And my issue with leaving it to others is that we've seen that if you leave it to others, the majority of them over time won't overperform the stock market or the index. So why not buy the index and make sure you are doing everything possible to track the index? So yeah, hopefully that answers your question around that.
And I just wanted to add to that. It's, when you're working with a firm directly and working with a financial advisor, they're giving you recommendations catered to you, catered to your goals. And they take into consideration your appetite for risk, your preferences, your timeline for your goals, your investment experience, and it is more bespoke when they give you a recommendation. following someone else's trading plan or investment plan, it may not necessarily align with yours. Sometimes, I think we overemphasize just focusing on returns, but you don't focus on the strategy to help you make sustainable returns. And I think that's a very important part, a part of an investment strategy.
Mhm.
This is a marathon. This is not a sprint. And that's really important to kind of, remind everyone, from time to time, that, it's important to take these things into consideration. But that's my 2 cents on that.
Mhm.
Um, there's a question here with regards to roadmap. What's expected from Sarwa, whether it be in the near future, I guess, or the long term? What are the things that we're looking at?
We're looking at faster funding. We're looking at more choice, so more asset classes on the platform, so that we really believe it can be it can be beneficial for people to have everything in one place rather than their money scattered across many apps. So I think expect from us, yeah, a faster app and more asset classes to be part of your portfolio and to diversify into it.
For that. I've got a question here. It says here, I'm new to the investing world and I've always had this question. Okay, I'm excited. Thank you for giving us the opportunity, Anonymous. If I invest in ETFs, do I get dividends? Or should I invest in individual stocks to get dividends?
You do get dividends by investing in ETFs. It's one of the biggest innovations in the financial industry. And I asked that to BlackRock, is there anything better than ETFs coming up from a infrastructure? And the answer was pretty much no. So the cool thing about ETFs is that if you wanted, let's say, a basket of the 500 companies, the largest 500 companies in the US without you having to manually buy each one, this is exactly what an ETF does for a tiny cost. It's like 0.03% or something very similar. It's such a low cost of the fund itself. Um, of course, you need to see the provider that you're using if they're adding a transaction or a management fee for that. But the ETF itself versus stocks, it's very similar. So if your goal is to get exposure to a large number of companies, which is also a great idea and a way to diversify, then ETFs also pay out dividends as the same way that actually some people think that ETFs are a synthetic option, but the ETF is actually going and doing the buying of the underlying stocks as well. So if you are buying an ETF of the S&P 500, Vanguard or BlackRock or whoever fund you're using will go and execute these trades as well and buy shares in Apple, in Microsoft, in Meta, etc. So there's no difference to that if that's what you're seeking.
Thank you for that. I know we're getting close to the end of the session. I'm going to try to get as many questions out. I apologize,
Rapid
everyone.
fire. Let's do it.
Everybody question. Um, why do you keep money in cash for Sarwa Save? I think that's what it's saying. Isn't parked, maybe I'm, why do you keep some money in cash for Sarwa Invest? My apologies, I read it wrong. So essentially for Sarwa Invest, for the users who might be in this call may not understand the question, there's always a small component left in cash. And the question is, isn't parked money dead money? So why do you have it there?
It's purely there's a small part that's left in cash for things like fees or operational transactions. So it's to avoid, for example, having to sell anything to collect fees or management fees. So we leave a very small amount in cash to avoid running the portfolio with having it being invested. But you'll notice that it's always a very small amount, and the majority, more than the majority, will be invested.
What we don't want to do is, redeem assets to pay for fees. That is never, something that we ever want to be in a position. So we just make sure we leave a small surplus. You're typically looking at about 1%, and typically less than 1% that's sitting idle in cash to be able to pay for the operational, for the fees and to make sure that there's enough liquidity to be able to get into opportunities within a portfolio from time to time. There's a question here by Summer. I was talking about the Sarwa trade, and I'll read it out. It says Sarwa recently introduced a commission fees to Sarwa trade where it's 0.25% or $1 of the trade value, whichever is higher. I joined Sarwa knowing it's free trading, but I also know that these fees are required due to your higher operational costs.
Mhm.
Do you have any plans to remove these trade fees in the future? If not, are you not worried that investors will go to other brokers who offer no fees on trades? We all know fees eat into returns, which is a brilliant question, Summer, and a fair
Yeah,
one.
very good question. I guess I would like to say there's a few things, but I'd like to start with some context around Sarwa Trade, where Sarwa Trade started as a complementary new offering to Sarwa Invest, where people wanted to get more control in terms of buying and selling individual stocks. So, and as you called out, Samer, there's been an increasing rise in costs, whether it's from brokers that we work with or general fixed costs. And we introduced Sarwa Trade in November 21. We waited, there was a few years where we were also part of the zero commission wave until we realized it's not as sustainable to run, and it just really exploded in terms of popularity when it was supposed to be more of a complementary service. And we wanted to invest more in it. We rolled out a lot of features that it became very different from when we first launched it, and we want to take it a lot further. So that's why we also, when we looked at how do we price it, we wanted to make sure that it's transparent and doesn't leave you wondering what other fees are there, because we've seen other platforms, they'll maybe say they're zero, but they'll hide a lot of fees into funding, into withdrawals, into inactivity, custody, and we wanted people to only pay when they're using the platform. So that's why we went with this model, where it's still significantly less than what people are making in terms of returns and in terms of activity. And I believe you asked about tiers as well. That's something we're also looking at, to have a tiering service. So we're not worried about people moving over, because we believe we have a superior service, superior platform that's simpler. And it's also transparent that if anyone else is bragging a lower fee structure, I would invite you to calculate your all-in cost if you factor in depositing money, withdrawing money, if you what the custody is like, if you need to so factor in your all-in cost. And that's why we felt like it was too complicated the way the industry was quoting. So our entry into charging a fee, we wanted to make it as simple as possible.
And let's not forget the spreads as well, too, which I'm not going to name the company, but there's certain entities have been fined for not being very transparent on the spreads that they're applying on the stock purchases themselves, which, it's not something that you have to kind of worry about or focus on through Sarwa. I'm just conscious of time. I've got 2 minutes, but I've got two brilliant questions that I want to get out there. This one is really quickly by Divya. As an investor, what are the ways that I can interact with Sarwa employees, or how can I interact with Sarwa employees more often, considering that we're not professionals in industry?
Yeah, we do a lot of events, Divya, and this is only one of them. February is actually quite a busy month. We're gonna be at STEP as so one of our CTO is a speaker there. We're gonna do an event in Hub 71 in Abu Dhabi, also the week of the 20th, roughly, where we're gonna be talking about lessons learned from Warren Buffett. If you're subscribed to the newsletter, you should be getting stay informed around some of these events. And it's people from our advisory team, our leadership team that attends them, the marketing team that's always just doing a stellar job at organizing them. So I would encourage you to do that. And we always try to mix online events with in person, and you can get to meet a good amount of our team, and appreciate you raising that.
I'll take the last question for the night. Very famous name, anonymous. How can the average investor become more pro at investing? What courses, knowledge, to do to get to basically to the expert or professional level?
I think I would encourage you to flip the question and say what are the things that I should be avoiding to in order to be a pro, as opposed to, so invert the question to see what are some of the behaviors I should be avoiding. It's easier to answer it that way than to say these are the things I need to be doing to be considered a pro. So if you see the pros, what are the things that they are not doing? And I feel like most people make more mistakes by yeah, it's much easier to identify the mistakes and avoiding those than understanding what do the pros do right. Because I find that the pros, or people that have done well, each have their unique path. Every single asset class pretty much has its hero, or its leading figure. You have Warren Buffett for US stocks, for example. You have Ray Dalio, you have people that have done well in real estate. So many, but what they will all have in common are traits where when things get rough, they won't, if they said they want to hold this for 10 years and things get rough, they will hold on to their portfolio. They will avoid to buy high, sell low. So I think to become a pro, learn more about some of the mistakes that people make, such as um, um, these behavior traits that really destroy value. And if I were to name a few, pros don't wait until they're in their later part of life to start investing. They get started sooner than later and let compounding do the work. So they don't wait. Pros don't put all their money in one single stock. They diversify. They take measured risks. They know when they are taking a lot of risk, or they know when they are playing it safe. Um, Pros don't, uh, yeah, and they don't get emotional. I would say these are some of the like top things that come to mind. So, but in terms of more tangible recommendations, my advice is to avoid also, or not to avoid, but like if you are consuming content, try to consume content that is survive the test of time. So I really enjoy, for example, Warren Buffett as a thought leader, because he's lived through many, many crises. So try to look for content of people that have survived the test of time and have lived through many crises, rather than some of the more novel content that is more doom and gloom and can make you more paranoid to get your engagement rather than to inform you. So as an example of that is like the fall of the dollar last year was such an overdone topic. And but if you read, it's something that's been coming up for quite a long time, and it's something that Warren Buffett, for example, will acknowledge as something very transient. Um, so yeah, I hope that helps, but uh, yeah, try to avoid the mistakes more than get things right.
And Anonymous, I just wanted to add, there's quite a bit of content available on our website, actually catered for individuals who are looking to learn. So if you go to our homepage, you go to the Discover section, you'll have a tab that gives you access to our blog. There's years, worth of accumulated content that helps investors, guides them through the different scenarios and different ways to think about things, best practices. We do host webinars quite frequently about topics such as what you've discussed. And if you're not able to make it for our webinars, that's okay. Go to our YouTube channel. We have all the library of previous webinars and previous questions that we've addressed that you might find an answer that you're looking for. So I think that's a great place to start.
Yeah,
On that note, Mark, it has been a pleasure. Thank you so much for hosting everyone today for the
thank you,
AMA
Ayman.
Anything. And I want to thank the audience as well too for joining us this evening. Please do come back and join us for future events, whether it be webinars or seminars, or any other ways that we can just keep in touch. We definitely welcome you to have a conversation with us at any point in time.
Pleasure. Thank you, Ayman. Thank you, everyone, for the engaging questions, and take care.
Have a good night, everyone.
Bye bye.